Very esteemed viewers of this webcast from the GST Indirect Taxes Committee, a hearty and a very, very warm welcome to each and every one of you. On the screen today, you can see CA Umesh Sharma ji, former Vice Chairman GST Indirect Taxes Committee, sitting member of the Central Council, the 25th Central Council of ICAI, Vice Chairman of the AI Committee, and a person who is highly tech savvy. We also have Dr. CA Advocate Gaurav Gupta ji, a very eminent chartered accountant, which many of you know. Very esteemed members, each week the GST and Indirect Taxes Committee comes to you with a set of topics designed and curated by our own Secretary of the GST and Indirect Taxes Committee, Smita Mishra ji, and the entire team of the GST and Indirect Taxes Committee at New Delhi ICAI, technical support given by Ashok and his team. Esteemed members, as we get into the rigmarole of the tax audits, GST finer points become extremely important. And as the season of Dashera, Diwali, and the festivities all around, we should ensure that the filing of returns and the other parameters of our clients do not take a back seat. It will not take also. Reminding you all that as we approach the election month of ICAI, from tomorrow onwards, the code of conduct from September 3, the code of conduct will be applicable to all the members who will be contesting the elections to the regional council and the central council. And this is one reason why we will not be visible in the webcast from tomorrow onwards. And we'll be having our non-contestant members who will be handling this. Hence, ensure that you do not forget what is this 3 months, these people are not there, where are they, and all those stuff. We'll be doing our work from the background. Today, we have very, very eminent faculties. In fact, CA Umesh Sharma ji, the sitting member of the Central Council of ICAI, the Vice Chairman of the GST and Indirect Taxes Committee when I was the Chairman of the GST and Indirect Taxes Committee, a person who hails from Aurangabad, or the new name, the Sambhaji Rao Nagar, the new name which is there. A person who is very close to Shirdi. You can see Sai Baba in your own screens with me. A person who hails from a family which is deep-rooted in education. His father is a chartered accountant. His wife was also a student of chartered accountancy, but chose to not to write certain examinations, and that's how she remains, along with Umesh Gupta ji, sharing his laurels. It is also my proud privilege to inform you that the daughter of Umesh Gupta ji, Rudrani Sharma, she scored All India first in the entrance examinations conducted for the students who will be joining architecture as a medium of study, as a medium of education. Esteemed friends, the NATA examinations conducted by the All India body for those students who qualified 12th and then who want to take up architecture, and rightfully so, coming from the blood of Umesh ji, she stood All India first. A great Gaurav, I must say, a very, very big inspiration for the entire city of Aurangabad and for chartered accountant. And today, she has joined India's premier architectural school, the number 1, which is located in Ahmedabad. It is a proud moment for not only the council, but also for each and every CA. Esteemed friends, Umesh now holds the record for writing continuous articles week after week in newspaper by name Lokmat. His conversations are similar to what Krishna and Arjuna's conversation is, and he writes on GST. And it has become a practice for every news reader to read that, and that is one reason why this particular article, his writings have been continuously coming in the newspaper, and today he holds a record, Indian record, for the maximum number of articles published by a single person in a journal, in a newspaper. Esteemed friends, that is not the end of Umesh. More to come is that he has published 2 books. Very recently, they were released by none other than the former India's Minister of State for Finance, Dr. Bhagwat Karad in Aurangabad. Those 2 books on income tax, short publications as a guidance, has been released. And all these things go on to reflect the kind of intellectual abilities which Umesh Sharma ji encompasses in him as an individual. And we are proud that we have a person like him in the Central Council of the Institute of Chartered Accountants of India, when members across feel that council members have no work, they have nothing to do, they have acquired their degree, someone has given it to them as a dole, and a qualification which they got somehow. That is how people's thinking is, that they don't have no work. That's how they come to serve the institute. But here is one man who proved everyone wrong and comes from a city with about 800 chartered accountants, if I'm not wrong. Thank you, Umesh. You made us proud. You made us to hold our head high and say, this is the council, this is the intellectual power of the council. Thank you so much. And today you are the speaker. I know the time of the kind of busy schedule you are in. Thank you very much for accepting our requests. And then we have Dr. Gaurav Gupta. What to tell about him? He is not a council member, but is more than a council member, a person who is always available for the committee at all times. He is available. He is one person who is just a call away. A PhD holder, advocate, a person with an in-depth knowledge and experience in the field of indirect taxes. Whenever the committee needs a firefighting, whenever the committee needs an intellectually intelligent input, we knock the doors of CA Dr. Advocate Gaurav Gupta ji. And his passion for this institute, his love for the subject, and his desire to share the knowledge is what has brought him today in front of us one more time. Thank you, Gaurav Gupta ji. Thank you so much for being with us at all times. And our GST Indirect Taxes Committee Secretariat, who is working round the clock 24/7. They have been instrumental in putting this together one more time this week. Sincere thanks to them. With these brief opening remarks, may I now request both the speakers, maybe first Umesh Sharma ji can give a brief opening remarks, and then after he has concluded, he can hand it over to Advocate Dr. Gaurav Gupta ji. Over to you, Umesh Sharma ji.
Yes, sir. Thank you. Thanks to Almighty, my Guru, my friend, philosopher, and guide, my RK sir, and Shirdi Sai Baba is behind you and you are in front. So both my Guru and my Almighty are in front of me. And friends, frankly speaking, sir has given you lot of information about me, but that is the love and affection of RK sir. And I am still Arjuna, and RK sir is my Krishna in GST. And we proudly say that in council, RK sir is IGST, Sushil sir is CGST, and I am SGST. And we all three are in GST. GST is our mother subject. AI is my daughter subject. So it is very happy moment for me, because this is the first session in GST committee in this year, and thanks to RK sir for bringing me back in GST. And I am feeling so proud to come in front of you and discuss on GST, which is the most important subject that I wanted to share with you. And it is always happy to share the things with
Video बंद कर दो आपकी, your voice
yeah.
will resonate more. Video, please switch off the video.
Yeah.
Fine.
So it's always a pleasure and happiness to have RK sir in our discussions. And whenever GST issues comes to me also, I also discuss with RK sir. And thank you, RK sir, for giving me chance to discuss on today's topic. And yes, we again sharing the same dais with Gaurav Gupta sir, which we have done earlier last year. Now, this time, friends, when we discuss on the subject matter of today's webinar, the very important subject, the subject matter of today's webinar is audit of financial records, GST Prospective. So, friends, when we go through this, the topic was designed in such a fashion that RK sir wanted that in the GS tax audit era, because the season of tax audit is going on, so our member should also know, along with income tax, what's the intricacies of GST is there. So it is the foresightness, it is the what we call a ground reality discussion that RK sir wanted to discuss. And thanks RK sir for choosing such a topic which will be practically help our members. And when we go through this topic, we will have first discussion from our Gaurav Gupta sir, and then we will take panel discussions, panel questions and answers. So friends, participants, please stay connected and enjoy your evening with us along with income tax and GST, because it's a GST which is also to be reported in the tax audit report, the clauses 44 and many more things are there. So thank you RK sir for giving us chance. Over to you sir. Yeah.
Yes, sir. Thank you, Umesh ji. And may I now request our advocate Gaurav Gupta ji to please take over and lead this discussion on the financial statements vis-a-vis GST in the audit period which has just commenced yesterday. Thank you very much, sir. Over to you.
Thank you, sir. Sir has always been kind, and we are very grateful to Rajendra sir for giving us this opportunity. And I can tell you, the vision of the committee is driven by their leaders. And we are so proud that this year we have so many MOUs and other things which have happened in the committee under the leadership of Sushil sir and Rajendra sir. And sir, we always look forward that this kind of contributions we will be able to make. That is only because of your vision and leadership, sir. So we are always grateful, and thank you for your kind words, sir, as always. Also grateful to the IDT committee, and it is always a pleasure to share the dais with Umesh ji. The topic which has been selected today is very, very unique, I would say, because not many forums take up this particular topic of GST reportings under the tax audit and the statutory audit. And the gravity of this particular topic often is missed by many of the auditors. When we are reporting for company audit or for that matter tax audit, The focus is to comply with what Company Act per se say, or for that matter, what Income Tax Act requires on a clause by clause basis to be reported in those particular forms. And somewhere the GST reportings per se, they are not looked into. Now, the first question will come that what are the things which are to be looked into? My dear sir, let's take ourselves back to the financial statement. Let's focus on what the GST authorities will look into. And then we will look into what the auditors should look into. The GST authorities are interested in certain parts of the financial statements, if not the entire. Because if you read section 73 and 74 of the CGST Act 2017, the two sections are the sections where a demand of tax, interest, or penalty can be created on any of the taxpayer, whether registered or otherwise. The condition is that he should be a taxable person, a person who is registered or liable to be registered. The demands of tax can be raised as per the two sections on three counts. Number one, short paid or not paid taxes. Number two, wrongful availment or utilization of input tax credit. And number three, if a refund has been erroneously taken. So from the financial statements, the three aspects have to be examined by the GST department. When we speak about the output, where from the outputs will be derived, that is number one. The department will look into your revenue side, whether you have paid and reconciled your output taxes as per your revenue vis-a-vis your GST returns. Simple exercise, what you all do in 99C, I'll not comment on that. And then including the revenue, I would also say there are other incomes. Other incomes will include your miscellaneous income, including your interest, your balances written off, your insurance compensation received, and n number of other names, foreign fluctuations, profit or loss on account of fixed assets, n number of items where you can definitely question whether those will be exigible to GST or not. We are not going into the taxability of those item by item today. Our focus is how to visualize and link the GST with our financial statements. Number two, apart from revenue, which is the credit side of the P&L, the second most important limb to look into is the disposal side or the sale side or the credit in case of fixed assets. So apart from depreciation, whatever has been sold in fixed asset is exigible to GST. Many of the friends might be still under the notion that if input tax credit is not availed on a fixed asset, its disposal will also not be taxable. Let me remind you, my dear friends, the disposal, which is the sale or for that matter, the transfer, is independent of the input tax credit at the time of purchase. Both has no linkage under the Act. Third, for the output side, the auditors, the GST department will look into the advances which have been received from the customers. Number four, the expenses which have been netted with the revenue. So revenue, instead of being reported in credit size, has been reported in the debit in the expenses. So for example, you have expended certain amount on behalf of a customer and you have taken that particular amount as a reimbursement. So while reimbursement is a generic term, the term which has been selected under Rule 33 of the CGST Rules 2017 is pure agent. Not all reimbursements will qualify as pure agent. So you have to be very careful that when you're using the term reimbursement, that is not perimeter, that is not same as with the term pure agent. So the benefit of exclusion from the value of taxable supply, which is available to a pure agent, will not be available to every reimbursement so-called. One of the very simple examples which every chartered accountant can correlate himself to. from reimbursements perspective is the reimbursement in case of bank audit. So dear sir, while you have expended something, you are taking those particular amounts as reimbursement from the bank for conduct of those particular audits, as the air is now clear on that particular piece that GST has to be levied, charged on those amounts of reimbursements. And even though those particular amounts have been netted from the traveling expenses on the debit side, the taxability of same or the exigibility of same under GST would still remain. So when you are speaking about items like cross charge of expenses, cost sharing between the group companies, all of them also are simultaneous or parallel examples of expenses which are netted or which are credited with the revenues which are received from a third party. Moving forward, so fourth was your netting. Fifth, when you look into your balance sheets, your financials, there can be elements which are not credited either to your P&L or for that matter, which are not netted, but they are going into some specific corpus or some specific accounts. Now, please, when I say corpus, I am not putting a taxability on donations or collections otherwise. I'm saying the revenues which are not going into your P&L. I'm not discussing taxability, my dear friends. Taxability is a second step. The first step is to identify what are the items to be looked into for determining the taxability. The focus right now, from my perspective, is to define those particular items for you. So that particular item you will look into in terms of the revenues or amounts received, but parked into some special accounts directly by the entity. Now, having looked onto the revenue side, short paid or not paid, this was one. The second element which you now need to look into is input tax credit wrongfully availed or utilized. Now, where do a person would look into before that? One small item I missed. When we pay output tax, it also will include the taxes which you are supposed to pay under reverse charge. Under reverse charge, your liabilities will stand under 9.3 and 9.4. 9.4 today is not a much of an effective section other than for builders and developers. 9.3 still holds good for almost all the taxpayers, and very prominent line items on which you are supposed to pay reverse charge are GTA, Goods Transport Agency, advocate fees, for that matter, the foreign payments, sponsorships. All of these items, rent-a-cab, your security services received in certain cases, these particular items have been provided or listed in notification number 13 by 2017 under issued under section 9.3 and next section 5.3 of CGST and IGST Act respectively. Now, where do I look into? Of course, every one of us know that those particular things on which reverse charge is applicable relates to my expenses, and I need to look into the expense head. For example, the freight. For example, the advocate fees under professional charges. For example, the advertisement sponsorships. So those elements have to be identified. There is no single ballpark rule as how to identify. One very sensitive area in this particular field will be your import of services, payment to non-residents. Three conditions under IGST section 2, subsection 7 has been defined or provided to make a particular supply as import of service. Number one, the recipient should be located in India. Number two, the supplier should be located outside India. Number three, the place of supply of such services should be in India. Now, my dear friends, not all services which are provided by the non-resident or the person who is located outside India to a recipient in India, the place of supply would fall within India. While I can safely say that 80 to 85% will fall within India, but there are certain 15% transactions which will not fall. For example, the hotels located outside India. So if you are taking a supply of services and making a payment to a hotel located outside India, the amount is not exigible to under reverse charge. But if you get the same account, same hotel booked through a a tour operator in your state, then the transaction is not a transaction with the non-resident, but with the resident. The tour operator will then pay to the hotel, and therefore his transaction with the hotel will become a transaction with a non person located outside the territory of India. So, place of supply in India, you have to look, which will be defined by Section 13 of the IGST Act. And those particular transactions are very, very particularly defined. Prominent, as I've told you, traveling, hotel, commission paid outside India. These particular expenses will not be exigible under import of service. Coming on to the input tax credit, as I was saying, that whether those particular things are exigible or are available, and if you are not availing or utilizing your ITC properly, then you are liable to make good the department pay the amount under Section 73 or 74, as the case may be, on this particular count. So input tax credit, your expenses are holding those particular input tax credit, but you are not debiting. Now, please understand and please note, you are not debiting those particular expenses in your expense head with GST. Those are being reported or recorded without GST. GST, your amount goes directly into or is adjusted directly against your output tax, be it your books or for that matter when you are availing, the same treatment is accorded in by your electronic credit ledger, and the amount is debited against the output tax which is to be paid for that particular month on the portal. Now, when you say input tax credit, one thing is you have to correlate the expenses. Second, as we proceed, there is one sensitive reporting under clause 44 of Form 3CD, where all the input tax credit or the expenditures have to be bifurcated. Now your entire P&L, the reporting requires to be bifurcated between 4 heads. Number 1, expenditure which are related to goods or services exempt from GST. Now exempt includes both taxable and non-taxable. When you exempt includes both non-taxable and those exempt under Section 11 of the CGST Act. So a specific exemption or a supply which is non-taxable, both will be included under the head exempt. So for example, certain examples of exemption. Number 1, the pulses, wheat, atta, which are unbranded, unpacked. In those particular cases, those are exempt. Those particular items, if it is being procured, that will be reported under the exempt supply. Electricity, for that matter. Petroleum, 5 petroleum products, including petrol and diesel, even though they are included in GST, however, there is a specific exclusion in terms of taxability under Section 9, subsection 2, and therefore there is no levy of GST on such particular petroleum products. And accordingly, they are a non-taxable supply under GST and falls within the ambit of GST exempt supplies. Same will be the fate with other exempt and non-taxable supply, barring. Now, this is very interesting, a case where you are supplying securities or for that matter, the money. These two have been excluded from the definition of both goods and services and Schedule 3, which is exclusion as being a supply, neither as supply of goods nor as supply of services. So these 3 items will be excluded for the purpose, even for the for computing the exempt supply, unless specifically included by virtue of Section 17, subsection 3 of the CGST Act. So, for example, the security supply are no supply because there is neither goods nor services. However, the section for the purpose of ITC reversal under Section 17, subsection 3, supply of securities is specifically included within the ambit of exempt supply for computing the reversal as required under Section 17, subsection 3, read with Rule 42 and 43. So, first is the details regarding expenditure relating to exempt supply. Under clause 44, again, the second is expenditure relating to entities falling under composition scheme. Now, all composition suppliers are registered supplier. However, they are not regular supplier. If you look into their profile, their type will not be mentioned as regular supplier, but composition supplier. And they have opted for payment of taxes in lieu of the taxes under Section 9. They have opted to pay taxes under Section 10, where they cannot take ITC, but they will be required to pay a certain fixed rate, which is a very reduced rate compared to the regular rate of the tax applicable on that particular supply. So composition suppliers, when you are obtaining certain supplies, you will be identifying those particular suppliers not normally. They will be identified on two counts. Number one, you cannot take the input tax credit from them. So from the list of suppliers from whom supplies have been received, but input tax credit has not been availed, those particular suppliers have to be examined to see who of them are composition supply. And that particular identification can only be made by going on a supplier wise basis into their profile and checking whether they hold a GST number in their invoice and or not. Please note, a composition supplier cannot charge GST. So you will not be able to find a GST entry of a composition supplier in your books of accounts. So many of my friends might confuse a composition supplier in terms of recording in the books of accounts with that of a non-registered supplier. So a very fine filtration of the detail of such particular suppliers on whom no tax has been charged is to be made from the books of accounts. Third, expenditures which are relating to entities which are not registered in GST. So those will be making a non-taxable supply, making an exempt supply, or who may be below the threshold limit. Either three of them will not be required to obtain a GST registration, and therefore what you will get from them is not a tax invoice. You will be merely getting them from them a bill of supply, or maybe an invoice, a commercial invoice by whatever name called, but no GST charge. And as just I have mentioned that from that particular detail, you have to take out the detail of composition suppliers. So this bifurcation will take some effort, which every assessee will have to make and provide to you. Last but not the least, expenditure related to registered entities. So after taking out the list of expenditure which are in relation to exempt, in relation to composition scheme, in relation to suppliers who are not registered. Now, exempt and not registered are two different things. My dear friends, entities which are below 20 lakhs of limit or 40 lakhs of limit, as the case may be, are not required to register, and therefore they may be making a taxable supply, but because of virtue of Section 23, they have not obtained registration. So you have to make a distinction between these two categories of reportings. Last, after taking out all of them, what is left with you is the expenditure relating to registered entities. Now, please understand, this will include two categories of entities. Number one, which are under forward charge, and number two, which are under reverse charge. So even a GTA which is making a supply to you, on which you are supposed to pay the tax under reverse charge mechanism, he may be registered and he may be raising you an invoice. So that particular person, that expenditure will be reported in this particular column, which is expenditure relating to other registered entities. We will take up this, I think, with Umeshji later in more detail. But I hope on your input tax credit side and vis-a-vis clause 44 of 3CD, the four different major heads I have already spoken on. Friends, whatever confusions or questions you will be having on this regard, on this count, we will be definitely taking them in question answer. And if time permit, if any further explanation is required, we will take it. Now, in terms of Caro, every one of us is aware that Caro specifically require under para 7 reporting on statutory dues. Please also allow me the liberty. I am no expert in terms of the stat audits or for that matter tax audits. I don't do them. That's my disclaimer with you. I am taking only the GST perspective of those particular reporting. So how sensitive GST is to those particular, reportings. I am just commenting on that. You may have your own expert views on that, and we do honor that. Under CARO Para 7, reporting of statutory dues, whether the company is regular in depositing undisputed statutory dues, including provident fund, employee insurance, etc., sale tax, custom excise, VAT, GST, to the appropriate authority. And then it also requires that. So there are two things, please understand, whether it is regular in depositing, and if not, the extent of arrear of outstanding statutory dues on the last date of the financial year for a period more than 6 months from they become payable. So we are talking about undisputed liability in terms of Para 7. And the clause B again says where dues in terms of direct or indirect taxes have not been deposited on account of any dispute, then amount involved therein. So they are talking about the demands which have been raised and being disputed by the entities. So one is the non-deposition of the undisputed amounts by the entity where they admit that we are supposed to pay this, but more than 6 months they have not paid it. Fortunately, I think none of the entities will be having more than 6 months today. I'm saying most of the, I'm not saying absolutely, for the very simple reason now the laws in terms of suspension of the registration when you're not making payment of your statutory dues by the GST authority itself is becoming very, very fast. So 3 consecutive months you have not paid your taxes, your GST registration is now liable to be cancelled. So post October 22, the amendment was made. The officer is now authorized to cancel the number if taxes remain unpaid for more than 3 months. So kindly please take note of it. You have to be sensitive to the fact that under CARO, the timeline is 6 months. And while the timelines for cancellation, which first is effected by way of suspension of registration under GST under section 29, is 3 months. So please report if still there are taxes, statutory dues not paid more than 6 months under CARO. And second, if there is a demand which has been raised, but it is disputed. Now, when it is disputed means there should be an effective appeal against that particular demand. And mere representation to department shall not be treated as a dispute. So there is a demand and a mere letter has been raised or written to the department that we are of the opinion that this particular amount is not payable by us. In those particular cases, you have to report those particular amounts. So disputed and undisputed, both amounts have to be reported. Apart from that, in tax audit, a very important limb is in relation to books of accounts. Please be very, very sensitive. Whatever books of accounts you are reporting in tax audit, there may be certain cases or instances where the auditor writes that looking into or considering the number of or type of goods, it is not possible for the assessee to maintain stock register. Now, kindly please note, you have made him vulnerable by not actually looking into the instance. If such a statement is written with full authority, if you are writing, then it is a mere non-maintenance of stock register. There is no need to defend it. Because if he is not maintaining stock register under GST, there is number one, it is a mandatory record to be maintained under section 35 of the GST Act, read with the relevant rules. Number two, if you are not maintaining GST, there may be questions from the authorities as how do you satisfy sections which require reversal. For example, section 17(5)(h), goods stolen, lost, destroyed. So if a person is not maintaining stock register, how the compliance of the block credit under section 17 from subsection 5(h) has been made by him. These are certain pertinent questions where reporting in terms of non-maintenance of stock register may lead to certain very important questions under GST. Please also note that apart from that, you have to report the registrations under the detail of indirect tax registration as required in the form. Nature and business or profession is very important, a clause. I understand you might be writing the major one, but please also note that this is also reflective of his indirect tax liability, and maybe one of the criterias which may be taken up tomorrow for choosing or putting the risk parameter for choosing that particular assessee for audit or special audit under section 65 or 66 of the CGST Act. Again, ICDS disclosures, whether any adjustment is required to be made for complying for made to the profit and loss complying with the provisions of income computation and disclosure standard under 145(2). Any increase and decrease in profits or net impact of ICDS, any change of your accounting methodology having also an impact of GST. So from cash to uh, accrual or vice versa, you have to be very sensitive in terms of factoring the GST impact also in these particular case. Method of valuing stock, FIFO, LIFO, we all understand, but please also understand in case of valuation of stocks, the value of GST will not be included if it is not an inclusive method. And in case of inclusive method, though it is not permissible, as I understand now, my friends may be having a better picture of this, but now the taxes are not included in your closing stock, or for that matter, the expenses. If they will be, then both debit and credit side will have the impact of taxes respectively. Depreciation under the Income Tax Act. Please note under section 16 subsection 3 of the CGST Act, if you have added GST to the value of assets, then no depreciation can be availed under Income Tax Act. So when you are making the depreciation chart of income tax, please examine this particular point, making or auditing, as the case may be. GST is not included, which has been availed as input tax credit in the value of asset being capitalized. So you have to be very sensitive to that fact. Otherwise, a double benefit is being taken by the SSE, and it will lead to a straight disallowance of GST credit under the CGST Act. Certain amounts which are to be disallowed are also required to be reported. One of them under section 43, when you are reporting amounts which are not paid. So if there is a liability which was incurred during the previous year and was paid on or before the due date of filing of the return under 139(1) of the Income Tax Act, that particular amount has to be reported. So balance any difference. Now here is where the main attention of all the auditors is required. You have a closing liability in your financial statements in respect of GST. That amount is supposed to be paid on or before the due date of filing the return. If that is not paid, that will be reported under the reporting sum under section 43B. Many of the entities, they don't bother to look into, while they have a good reconciliation of the sales and purchases, they fail to take into account the closing balance as reflected in their financial statements of CGST, financial statements. So there is always, in many cases, what has come in front of us in the last 2-3 years. During the audit examination, the GST department points out that your liability in your books of accounts, which is outstanding, is much more than what you have paid after the March of that particular financial year. Now, why this particular thing has happened? It has happened on 2 counts. Number 1, the entity has not recorded the input tax credit properly in the books of accounts, and therefore that particular amount has not been netted from the output liability in the books of accounts. While the netting is happening, the payment is happening under section 49 subsection 4 of the CGST Act on the portal. So there is a output, there is a input which is outstanding. Both two sides are in your financial statement. So that netting and the net result should be compared with the liability to be paid and reported under 43B of the tax audit. Friends, I think we have considered a lot. Last point, which under 44AB, I'll point out. So not 44AB. In your audit clause, form 3CD, you are supposed to give the details of the stock of principal items. Be very, very careful, my dear friends, because this is the quantitative detail which you are giving. And the quantity is very, very clearly mentioned there, that quantity, whatever is purchased, whatever is the opening stock, whatever is sold, should be very clearly reconciled with the purchases and sales. Tomorrow, when the department will be looking into the Form 3CD, the reconciliation between the stock of the trading concern will be reconciled with the sale and purchase of that particular trading concern. The situation got more grave, or it becomes more peculiar in case of a manufacturing concern, because there is also a raw material which has been provided vis-a-vis the finished goods. So there is something called a consumption ratio, which, while a percentage wise vis-a-vis the raw material and the output, can vary in terms of value. In terms of quantity, the consumption varying every year need to be explained by the person very, very specifically, because that cannot be on a case of a price variation. And more importantly, in the last 2-3 years, if you see, COVID period had a lot of price variation, but quantity variation, one has to very specifically provide. Another clause which is there is audits conducted under GST also has to be reported. Now, it was, the central excise audit details which were to be given, but now those have been replaced by the GST audit. Last but not the least, the ratios, be very, very sensitive. Authorities, the law, the approach matures every year, and the ratio variations. I know income tax, you have been answering these things, but GST also, you need to answer these particular ratio variations in your audits or in your inquiries, or for that matter, the investigations. I can tell you, next 6 months, this one form plus the financial statement will be a Bible for the department to take out quick question even before the audit will begin. Now, I would request Umeshji to add. I know I might have missed a lot of things, but yes, I would request Umeshji to please add perspectives and also whatever I have missed in this particular discussion.
Yes, thank you, Gaurav sir. I think you have not missed, but I requested Gaurav sir that please allow me to rope in for 10 to 15 minutes, and sir will take question and answer later on.
Umeshji,
And I
please,
have to
please.
leave for another meeting.
Okay.
Yes. So you are not missed, sir, but it is just a matter of time. Friends, when we both were discussing on this subject, myself and Gaurav sir, we have distributed some topics for discussions. And now, if we look at the complete discussion with Gaurav sir, he has taken us to the journey of the financial statements, expenditure, ITC, RCM, and also to the place of supply, then valuations, and many more things. Friends, here I just want to add some more points. First of all, most important is that when we are filing tax audit report, we are submitting form 3CD. And it is also very important to note here that whenever practically we file tax audit reports, we also finalize the income tax returns, and both goes together. So what is the significance of both documents, that is the competition of income or return of income and tax audit report from GST perspective. Friends, when we were there in Delhi, there was one conference, Chintan Shibir, which was happening between all the departments which are working under Ministry of Finance, and they have started integrating data from all the revenue departments. So that most important point to us is that whatever we submit to income tax department goes to GST, and whatever goes to GST come back to income tax department as such. So when we refer to form 26 AS or the annual information or TIU of income tax department reports, then you will find out the turnover which are reported in form 3B. Monthly, they are accumulated and shown to us while filing income tax return as a cross data. Further, whatever turnover which we are reporting here in GST goes to income tax, and also whatever we are reporting in income tax goes to GST. So reconciliation is very important part here, and I will request you to keep the working papers. If you are the tax auditor under income tax and also a GST consultant, then responsibility is more on us to maintain the proper working paper of that. Because whenever in future any scrutiny comes or a GST audits come from the department point of view, they will always go by the books of accounts and its reconciliation with the GST data. And in GST, when we will be uploading GSTR 9 and 9C, we have to give reconciliation with the financial statements. So please prepare a working paper of reconciliation, at least of turnover, while finalizing tax audit report itself. Though you may be filing 9C later on, but making a draft reconciliation will save you a lot, because the client always rely on us that, sir, you have done an audit, whatever may be company audit, tax audit. Now you people are filing 9C, so you should have checked it earlier. So that was one of the point which I wanted to put before you. Then second, whenever you are doing a tax audit or a company audit of a multi-state GST number entities, so there can be a different GST number that may be in Maharashtra, that Delhi or Gujarat or whatever it may be. So what you have to take care is that all data of GST number, whatever turnover reported, the 3B needs to be consolidated, reported under one PAN in tax audit report. So you must have a reconciliation of all the GST number turnover shown by that multi-state taxpayer, and you should have a columnar form of the states where turnovers are there, and you have to prepare a total PAN based reconciliation. This is very important because when we from ICI and IDT committee perspective, this was one of the requirement of CBIC officials, that they are getting difficulties to audit multi-state GST number client taxpayers. So they insisted that how we can create an document checklist or SOP for reconciliation with the financial statements. The financial statement goes on PAN basis and can be a different GST or one PAN. So please state GST taxpayer and reconciliation of that. Comes the next point. Next point is very important in case of the proprietors or partnership firms, where there are capital accounts of the partners, and there is a movement of few expenses happening from there, or some assets maybe get transferred to the partners' accounts or whatever it may be. So it is also requested to go through the capital account to reconcile or to check whether any GST specific entry is coming from that angle. And now I am focusing on one of the aspect that the important aspect of 44 Gaurav Gupta sir has already taken us. Friends, many times a disclaimer by tax auditor that data is not provided. But frankly speaking, now Tally in SAP or in ERP software, or there are few AI tools also. So if you have gone to AI in ICI committee website, you can find out some tools where you can generate clause 44 and which can be easily extracted Tally clause very hue and cry how it should be reported. So I will request you to refer to the publications of the publication of ICI is a guest note on tax audit report, which was also recently updated and published in year 24 by the direct tax. And that indirect tax has also given yeah, I am audible. Hello.
Yes, Umesh, sir.
you're audible.
We missed you
Yeah,
for
yeah,
2 minutes.
there was some technical glitch. I was gone out of the range and then came back. So, friends, clause 44 was very largely debated and discussed in the indirect tax committee meetings and along with direct tax. And we have developed a reporting format for clause 44, breakup of total expenditure of entities registered or not registered under GST. Here, when you refer to the guidance note of ICI, there is a detailed working given, and many of the important questions are being discussed here. First question is that a question may arise whether above information is to be given each headwise expenditure or total. So it's very important that it's a breakup of total expenditure. In working, you can keep a breakup of headwise expenditure, but in clause 44, you need not have to give breakup of headwise breakup of the expenditure. Further, depreciation, bad debts, and which are the expenses not to be reported in column number 3 to 7 of this that has been already clarified by ICI also. Then comes the schedule 3 entries or activities which are neither goods nor supply. They are also not to be reported in column 3 to 7. This is very important disclosure here. And it may be noted here that expenditure wholly and exclusively related to business need to be reported in clause 44. If the expenses are not related to business, they have not to be quoted here. And the format of clause 44 in tax audit report 3CD is very interesting format. It start with for the expenditure, and then we have to give expenditure differentiation for the registered and unregistered entities, composition, other than registered entities, and total payment to registered entities. Friends, this is a very important clause, and we have to give some disclosure here also that we have relied on the data of the client which is provided as per the GST returns, and also we have gone through the registrations of the suppliers as entered into the software of the particular client for which we are doing the audit. And the tax auditor should verify and furnish and test check the supportings which he is relying, because to verify a GST number, it is a very big task. So please give proper disclosure, disclaimers if you are not reporting the data here. And one more important discussion here, Gaurav sir, when we refer to the discussions, that is the today's discussions for our all participants, that is the financial statements and correlation with the GST. Today, whatever data is coming in our books of accounts, each and every transaction is looked into by the GST authority, whether it is a income side, whether it is a expense side, fixed asset sides, everything has been checked or cross-checked by the GST authorities. So friends, whenever we are looking from the statutory audit point of view or a tax audit point of view, we must take in our working paper the reconciliations and also notices, past matters, the audit reports or audit memos by the get glimpses of whatever litigations that are gone with the your particular client. If you go through the past notices, past audit memos, that will give you a very right what are the complaints or what are the issues with your client when you do the tax audit or the company audit, as the case may be. Now, if to get some interesting insights, will again request you to go to the GPTs developed by ICI. There is a special GPT developed the GST and IDT community. You can log in with your membership number and you can ask the queries whatever you are facing in that GPT to the particular assignment of tax audit or queries. GPT is based on the knowledge resources of GST committee and it's very helpful. And I am happy to quote here that the GST GPT of ICI is more trending and used GPT of ICI. First is direct tax and second is indirect tax. So go to eici.org and log in membership number, OTP will come and use that GPT. Friends, it is very important here that whatever publication are issued by the ICI, by the GST committee, you should refer. Background material has been recent published for the year 24, also for the previous year 23-24. Refer to the back material for whatever reporting or whatever technical issues that you facing in it. So I just wanted to put in some points. So, Gaurav sir, if tech team, please check Gaurav sir is there in, because now once Gaurav sir finishes his
Sir,
session, we
I
will
am
for
there.
the
Wait, sir, I'm there.
yeah
I'm there, sir.
yeah. So Gaurav, now you can take further, and I will request you to go through question and answers. And thank you, sir, for giving me some chance to speak. Over to you, Gaurav, sir.
Sir,
Thank you.
thank you, sir. Thank you, Meji. I think that was much value added. I think the practicality element in the entire discussion is what you have brought in, and which is much, much needed. It is not merely the theoretical reportings which I was speaking about, but the practical aspects also which are to be considered by the auditors when they are reporting. And I think every listener would be grateful for this value addition. I hope you are with us, sir, for the question answer.
I will have to move out, so I will rest, but I will join on virtual line.
Uh,
I
I
will
look
try.
forward. I look forward to that, sir.
Yeah. Thank
Thank you, sir. So, friends, we have received a lot of questions, and in I would say I'll be handicapped with Umeshji not present with me because he had to move out for some important meeting. But let me try my level best to address all these particular questions. The first question, now, again, this is a very simple but a very tough question to answer. As an auditor, do I need to determine the liability of GST of the auditee? Friends, as I understand, the auditor is not supposed to become a GST auditor of the assessee, of the client whose books are being audited. However, having said so, you will also have to be sensitive to a fact that auditor has been casted with the responsibility for reporting suspected or confirmed non-compliance with laws and regulation. Now, please understand this is there are two elements to it. Number one, the reporting has to be made in the audit report, where the auditor would conclude that the non-compliance has a material effect on the financial statements. So, for example, and we are not talking about an opinion of the auditor, when it is prima facie that there was some amount of taxes which were supposed to be paid, which are unquestioned, which are undisputed, but not recorded in the books of accounts, and where the materiality of those particular books of accounts may be impacted if such particular taxes are not taken into record. So the auditor, in my humble knowledge or opinion, will be required to express a qualified or adverse opinion in the financial statements thereof. Similarly, now please understand this is something which is very, very sensitive. We all have seen the era where a lot of fake invoicings have surfaced. What is fake invoicing? The term has not been defined. However, the term is identified by the department as well as the experts of the subject as transactions where there is a mere exchange of invoices without two things. And this is and or both. Number one, non-movement of goods or services, non-provision of goods or services, number one. And number two, which is either or. So first condition or second, first condition and second. Both will be included in fake invoicing, which is non-payment of taxes to the government. Now, how is it possible? See, any trading unit you are auditing, and you find that that particular person has a purchase invoice, that has a sale invoice, that has a vehicle GR, e-way bill, bank statement. Now, these are normal documents. Nothing in a normal audit brings a suspicion to you that these are not genuine transactions. To that extent, I think the law is in the favor of the auditor. It is a trite law that auditor is not a bloodhound. He is only a watchdog. So please, we are not the person will not be, the auditor will not be required to investigate. But on a very prima facie opinion, if he looks into those particular documents, and there can be very compelling documents. I'll give you one small example. A person has received, he is into the sale and purchase of, let us say, televisions. He has purchased the televisions, he has sold the television, that turnover is being reported. Same can be with the computers, same can be with the mobile phones. Now, in all these cases, every transaction of goods is having an underlying serial number. And in case of those equipments which are having a network implication, a telecom implication, an IMEI number will be there. Now, the auditor looks into the documents and he finds that, yes, there is a purchase invoice. On the test check, purchase invoice, e-way bill, quantities, values, payment to banks, everything gels. And then the auditor also finds that the person who has purchased, he is also having a list of packing list with it, where serial numbers are mentioned. Now, in normal circumstances, the serial numbers which are mentioned should be, you're not supposed to go into every serial number, look into and find out what model it is. But on the very look of those serial numbers, if you find that some of the serial numbers have been repeated in different invoices, that is a good enough element to raise a suspicion whether those transactions, because no two serial numbers of two equipments can be same. So if that kind of a suspicion has been raised, in those particular cases, you will have to report, or you will have to first check with your SSC, and if no suitable answer, then that particular suspicion is a good enough suspicion to take a adverse view on those particular transactions. So my dear friends, prima facie, on a sample basis, but a thorough check may be made. Investigations and audits still have those fine lines between them. You are not supposed to cross the line, as I understand, in my humble opinion. But you are definitely not to be taken your audits in a very casual manner and not looking into the very basics, even on sample basis. So if those transactions are there in front of you, in compliance of the essays and the ICI guidelines, you will have to report those particular things. And more importantly, in terms of PMLA and other acts, the responsibility which has been casted or is required may be more. Second question, which is there in front of us, is whether GST amount will be included in expenditure in books of accounts. My dear friends, I have already spoken on this. GST in the exclusive method, which is now the norm, is not supposed to be included in the expenditure side, debit side. It will not be included, because when you're taking the ITC benefit, that particular amount will be out of those particular expenditures. So please keep that particular thing in mind, and more particularly in case of fixed assets, specific disallowance under section 16 subsection 3 is there, where ITC of the amount added into the value of depreciable asset will not be available to the to such SSC. Now, third question: what are the steps that need to be taken to reconcile books of accounts with GST portal to ensure that balance lying in the electronic credit ledger and cash ledger matches with the books of accounts? Friends, very interesting part comes up on this particular piece. You have your balance on 31st of March 2024. This is the period which we are looking into. Please understand, 31st March 2024, the balance which you will be looking in will be for cash ledger. For the very simple reason, the cash ledger as on 31st March 2024 will contain all the payments and adjustments up to 31st March. But for balances in terms of credit ledger, the balance which should be considered should be after the debiting of the output liability in that credit ledger after the return of the month of March 2024. So when both balances, which is cash balance as on 31st March and credit balance after the filing of return for the month of March will be added, should be the balance which should be reflecting in your books of accounts as on 31st of March 2024. Now, the discrepancies which have been noticed in many cases, I've already spoken on some of them. The other points can be the availment of tax which has been deducted at source in case of government entities, to the persons who are paid by the government companies, government entities. Under section 51, 52, 51. TDS of GST will be deducted, and that particular amount will be have to be availed by such person on the portal. Many SSCs fail to do that, and that becomes one of the reasons of difference between the balances in the books of accounts vis-a-vis the portal. So I've already spoken, so I'll not reiterate all of them. Fourth question. GST implication on incomes earned from sources other than regular business, such as income from sale of fixed assets, interest, scrap sale, expenses credited. Friends, again, it will be very tough to list the GST implications on all such items, but very prominent, no GST on interest income, which is exempt. Also, interest income will not be included for the purpose of reversal under section 40 or under rule 42 and 43, read with section 17 subsection 3 of the CGST Act, input tax credit reversal. Sale of fixed assets is taxable, I've already told you, and only in the case of motor vehicle has the notification been provided that many of the professionals are missing on this one piece. In case of sale of fixed assets, it is only the motor vehicle where the difference of the sale value vis-a-vis the WDV has to be taken. Otherwise, in all other cases, it is the absolute sale value. All other assets other than motor vehicle, absolute sale value, which is exigible at the rate notified under section notification number 1/2017, on which GST has to be paid. Sir, what about the scrap sale? Sir, two things. Scrap sale, you have to check. I'm not taking you to GST audit, but again, if it is something material, there is a 5-year or 60 months from the date of invoice, which is required by Rule 43. That period has to lapse. If it is not lapsed, then in that particular case, certain ITC is supposed to be reversed vis-a-vis compared to the sale value. So you have to take care of that. Number two, in case of scrap, where it is a scrap of inputs, not capital goods. Capital goods Rule 43 will come. Inputs, you will have to check whether that is scrap is a normal business process scrap, or is it a special scrapping of good items because on any count, maybe a deterioration in technology, quality, or whatever. If that scrap arises because of the goods which have been destroyed, written off, then appropriate reversal under 17(5)(h) has to be made. Next question. High impact reconciliation to be performed during audit. 1 versus 3B, 2 versus 3B. My dear friends, very, very important question again when we are saying that non-payment of taxes has to be reported. How will I come to know? If there is some material deviations or non-compliances, those have to be reported under your stat audits. How do I come to know? So, prima facie, the reports are available on the portal of the taxpayer. If you go onto the GST portal of the taxpayer, you should take a printout of the comparison report of 1 versus 3B, 2A versus 3B. All of you are aware because you have already got 17, 18, 18, 19, 19, 20 audit assessments done. 73 dates are over. And I know many of my friends know it. So simple, take that chart out. If there is no material deviation, there is a difference of 10,000 rupees in a turnover of in a total tax liability of 10 crore. I don't think you need to spend time on that. Even on 1 lakh, don't spend time on it. But out of 10 crore, if there is a material amount of 1 crore where a difference is shown between 1 and 3B, 2 and 3B, suitable answer should be taken from the taxpayer. And if not found satisfactory, then proper reportings should find their place in your audit reports. How to handle the, again in this particular question, it's a very wide question which was asked. So, proper information in terms of interstate supplies, amount of ineligible and blocked input tax credit. My dear friends, I don't think that we need to do a complete GST audit here, but yes, on the prima facie view, which I have told, the materiality have to be looked into. Now, that is one judgmental question, which every auditor will decide on its own, will not be dictated by any speaker, and it's very unique to every audit. So audit is not merely a scientific formula. It is also an experience, an art, and you are more equipped with that in comparison to me. While I am here to help you with the GST perspectives, the sampling, the exposures, the materiality, I think you are better persons to answer those questions. How to handle the financial impact of assessment appeal in current financial year relating to previous financial year. So, for example, there is a demand under section 73 or 74 which has been brought out. So in those particular cases, see again, disputed, undisputed Caro reports. If there are two limbs to it. If there is a demand which has been confirmed, undisputed, the taxpayer has paid it, that can be debited to the profit and loss account, allowed as an expenditure, provided it is not a penalty. All penalties under GST statute cannot be debited. And if debited, you will have to disallow them in the tax audit. Please do remember that. Number two, if they are disputed tax liability, undisputed, pay or report. Clear rule. Undisputed, the detail has to be given under the clause B, para 7 of the CARO, that these are the amounts on which the assessee is under appeal. The details of the appropriate authority, amounts, and etc. has to be given in the audit report. Next question, what care should be taken for reporting in clause 44? Friends, I think both Umeshi and myself have spoken in length on this particular aspect. If a question can be more specific, I would be in a better position now to address, because I've already addressed this question. What are the difference between suppliers from registered person and composition? Friends, as I've already told you, the composition will not charge a tax from you. He is not supposed to. And therefore, his bill of supply will be given to you, but having a GST registration number. It is only a composition supplier who is issuing a bill of supply with a GST registration number, marking himself as a supply under composition under section 10 and appropriately under the CGST Act. So that is a bit of an exercise to take out those particular amounts. No shortcuts to that, friends. How should discrepancy in GST reporting be addressed in CARO audit? I think my dear friends have already answered that. Whether related party transaction valued as per GST valuation rules have to be adopted for income tax also. Clearly, no. 43B, your related party transactions under the Income Tax Act, when you have to report, those particular reportings which are made have got no impact on the amounts under, the value determined under section 15 subsection 4. So payments to specified persons under 40A subsection 2 clause B, you are supposed to furnish the data. You're not supposed to determine the amounts which are at arm's length. Section 15 subsection 4 of GST statute requires the transaction between related persons or transactions where money is not the sole consideration. Two cases only. To be the cases where value has to be determined as per the rules. So rule 28, 233 will decide the fate of those particular values. And in that particular case, rule 28 says it should be the open market value. Reading that with second proviso of rule 28 will be the appropriate strategy, but that is for GST purpose. In your audit, the value which has been adopted by the assessee, right or wrong, I don't think that is to be looked into. But yes, as Umesh mentioned, whether those transactions are being taken, so there is a movement of goods between the branches, are those transactions being reported? Those are something which are material, which may have a material impact tomorrow on the entire financials. So those are the things which you may look into. Recently, everybody is aware. I am not stating anything on the correctness of the transaction, but Indian MNC has been served with the show cause notice of more than 32,000 crores only on count of the distinct person or the related party transaction. Since I do not have access to the entire show cause, I will not comment. But again, the reportings which have come from various media sources, these are related party transactions which are on which tax is being demanded. Now, that amount is a substantial amount. May be correct, may be wrong. If it was correct, auditor also need to look into it. If it is not correct, then maybe no. So I think we cannot put a ballpark or a straitjacket formula to this particular context. You have foreign branches, you have Indian branches, you have uh, related parties. Those particular transactions are being reported everywhere. Kindly see whether those transactions have adequate GST has been discharged. If not, is there a reason which is available with the taxpayer, which is reasonable not to raise a reasonable belief that taxes are duly complied. Next question. Just 1 second, friends. There are some. Just 1 second. Sorry. Yes, friends. GST treatment on income from TDS under 140/94 my dear friend. The today's seminar is only from GST perspective and not on tax audit report per se. My humble apologies, I may not be able to add value on this aspect. Whether in GST audit any problem arise for either GST liabilities or input tax credit, if proper reconciliation is not done in books of account. Otherwise, we can prove from GSTR 1 and 3 that there are, I think this was more of a statement than a question. And I think the learned writer is very correct in what he has said. What are the requirements of submission of returns under composition scheme? Whether manner was a regular GST payer in last financial year. Now, my dear friend, again, we are not going into the composition part today. Please allow, because looking into the paucity of time, we have 15 more minutes. Let me first take up all question. If time permits, I'll come back. Can appeal be pursued to NAT through form in GSTL this against order under 161, where appeal order was issued after 3 years towards SCN issued? I think you are talking about an appellate tribunal which is still to be formed, though the notification is effective 1st of September. But my dear, please hold it where you are supposed to file within 90 days. So September, October, November 30 is the date when your timeline lapses. Please hold it for some time, because the tribunals will be in place. The notification is there, but the setup or the infrastructure is yet to be in place. Just hold it for 15 more days. I think we'll get more light or an extension in this regard. Organization is registered in more than one state or union territory for supply of goods. Next question. When CGST department conduct audit under 65, they in one state they ask for reconciliation of all GST registration wise data or details mentioned in annual report. Now this is again what I think Umeshji mentioned. While your GST compliances are on this one state-wise basis or a GSTN basis, the pan India balance sheet under income tax or stat audit is a single financial statement. Now, considering this fact, there is always a issue. There is always an issue which is faced by the assessee during GST audit. So I think this issue can be overcome if you are maintaining a state-wise or a GSTN-wise trial balance. Now, is it required under the statute? No, sir. But again, there are certain practical aspects, there are certain theoretical aspects. Being rigid with theoretical and not following practical can only lead to a rise in the litigation. Even if there are practical problems with you where you cannot give a trial balance, then a suitable replacement of such particular trial balance with some statement of statement of expenses, assets, which are relatable to that particular GST should be provided to the auditor. Otherwise, the auditors will not be in a position to make an opinion whether there is any further liability which is relatable to that particular GST and not reported in the GST return. So suitable certifications from the auditor can also help. So multi-location registration and their audits are a problem, but not from the perspective of your stat and tax audits. Yes, from their perspective, I've already spoken that inter-branch transactions must be looked into, and suitable reply from the taxpayer if taxes are not paid on those interstate or related party transactions. If material, then suitable reportings may be made. When organization is registered in more than one state, I think this I have taken. There are concerns related to audit conducted by department official. There will always be, sir, because they will not agree to what taxpayers say. Scope of scrutiny of return under 61 vis-a-vis 65 should not be mutually exclusive, or can they be carried out simultaneously? Many times scrutiny is conducted after audited and done, and vice versa. Time limit for issuing SCN based. A very celebrated judgment of Honorable Supreme Court, Vico Laboratories, that if a particular assessment, has completed or has been made, it should not be reopened. Now that's a trite. So the Honorable Supreme Court said that reopening of concluding assessments amount to abuse of process of law. Now, if your assessments have been audit has been concluded, reopening of the assessments for scrutiny will definitely, in my humble opinion, it will be leading to abuse of the process of law, abuse of the process of adjudication, because those particular aspects are part of the audit, and therefore the opinion change cannot be permitted to the department in those particular cases. So you may resort to different reliefs, maybe in the form of writ or maybe to the writing to the authorities, to save yourself from these repeated assessments on the same issue. I am working as an accountant in ITS related. We do serve exports and want to file GST refund application. Now, my dear friends, I will not be able to help you with the complete process and documentation here. Please allow me. Rental services for residential are exempt, but there are certain exceptions. Can you explain them? I will, Sunilji, I'm just parking the question. Rental services for residential accommodation, residential buildings only are exempt. However, an exception has been carved out that if it is given to a registered person, in those particular cases, liability is under the reverse charge on such particular registered person. So residential accommodation for commercial purpose, taxable under forward charge, commercial under commercial process purpose, taxable under forward charge, commercial property for residential purpose, taxable under forward charge, residential property for residential purpose, exempt, exception if it is given to a registered person who will pay tax under reverse charge. If reconciliation of 9C is not done by the company, whether audited to qualify in his audit. See, for 23-24, reconciliation of 9C is to be done by December this year. So if somebody has not done, I think your audit precedes the audit to be done in 9C, not 9C, reconciliation to be done in 9C. And therefore, my dear sir, you cannot qualify. But yes, if the past reconciliations are pending and they are not being provided and they are leading to a material suspicion, I think it is duly to be reported. During the course of audit, as a time provided lapse and audit was not concluded, observation under section 73 were not replied, stating bad in law and asking for extension by appropriate from time by the appropriate, but same not provided. After that, reply from client has not issued a spot memo under 74. I am not able to get this particular question from my friend. I would request that if this can be reworded something, it's a bit, please reword. What are the amount that are being recovered from suppliers? What are the amounts that are being recovered from suppliers? I am again not able to get this question, my dear friend. Please discuss about how to report the 27A amount of Senvet. Now, there has been a lot of confusion on this particular reporting. Many of my friends who are doing the audit, they have said that this particular clause is talking about the mismatch between the accounting records and excise records. The schema on the ITT website also include ITC GST. However, the same has not been duly notified by CBDT. But I think some expert on the tax audit, let him um comment whether this is applicable or not. So, considering that if this is to be reported, because I am not into the compliance of this tax audit, suppose it is to be complied with, then my dear friend, that particular clause under 27A, the excise would all, the Senvet credit reconciliation would also include the ITC GST and movement thereof need to be provided by the auditor in that particular case. So in this clause, the amount of ITC credit availed and utilized during the previous year and treatment in the P&L account and treatment of the outstanding ITC credit in the accounts has to be provided. And it has to be provided in terms of the opening, availed, utilized, and closing balances. Those should gel. Now, this reconciliation with, I also understand that this will also have an impact or will have a correlation with clause 44 of 3CD, and yes, with GSTR 9C also. A lot of correlations are there, and tomorrow be ready. What again we are understanding today that all the reportings which are being made under income tax GST, they are being compared. And if the amounts are not mapping, prima facie cases notices are being issued by both the income tax department and the GST department. Yes, I know my friends will feel that this is making life tougher day by day, but yes, no doubts about it. But the life will become tougher for people who will rework everything every time. If you have one clear working with you and that particular working is a stable working, it is only the formats which will change, not the base data per se. So kindly use this clause 27A vis-a-vis 9C, and also the amount should correlate to the expenditure relating to registered entities in clause 44 of 3CD. Whether stock treatment in tax audit is mandatory, majority are not disclosing stock statement. I think, my dear friend, I've already said much about stock. Let me not speak more about it because, again, I understand the pain, but non-reporting, number one, or a wrong reporting can be fatal for both the auditee and the auditor. Reconciliation are done between GST receivable payable between books of accounts and electronic credit ledger 31st March. Differences are identified owing to the mistakes of previous year. What will be the impact if write-off are done in the balances in the current year? In my humble opinion, my dear friend, those are not available as an expense to the taxpayer, because this one question came up as a legal question before us. So in my humble opinion, that will not be available unless you are able to identify or prove that that is an expense relatable to that particular year and paid in that particular year. So please do consider that. How to identify composition scheme taxpayer? I think this is again a repetition. I hope, my dear friend, I've already answered that. In case of abnormal loss, is it necessary to do reversal? Question is not of abnormal loss. Question is whether it is goods lost, stolen, destroyed, or written off. The word is not abnormal loss. The loss is attributable to lost, stolen, destroyed, or written off goods. If either of the four cases are there, then GST reversal is to be done, my dear friend. Input tax credit of stock in transit on 31st, since you have not received the goods or services, barring the case where the transporter is your agent and delivery has been taken, ITC cannot be taken. And in such particular cases, such ITC can be parked in any of the appropriate accounts, but not ITC which is receivable or ITC which can be debited to your output tax register. How output, how related party transaction affect government revenue? My dear friends, often there is a shifting of taxes between the related parties by use of related party transactions. So suppose I'll give you a very simple example. There is a exempt unit, there is a taxable unit. The exempt unit may allow the certain expenses where ITC is there to be parked into taxable unit, and there is no cross charge. The rent is not charged by the taxable unit to the exempt unit. Now, don't you think there is a clear case of tax evasion in this particular case? Yes, my dear. In such particular cases, suitable responsibility in case of material transactions would also be parked on the auditor. So please look into these particular aspects. But yes, again, the word is material. If there are minor transactions, you cannot 100% guarantee or vouch that GST has been paid properly. That's a work which is for the GST auditor was to see. Even in case of GST auditor, the department has said that he has to check the arithmetic accuracy as per the press release, which was released long back in 2018 or 19 maybe. So a bigger responsibility cannot be casted on the statutory audit. Is it mandatory to generate e-invoice for scrap? Yes, sir. If it is a supply, then you will have to. If it is merely generation, then no. If it is not generated, can it be declared in next return? See, declaration of invoice and return is independent of generation of e-invoice. While if you have missed, you may write to the department that this invoice was missed to be generated as a e-invoice. You may take suitable under intimation to the department. You may raise it today, but your declaration in terms of payment of taxes should go in the month when the invoice has been raised. GST audit done by the department and after order passed, gone for appeal on order, but after the appeal for the same year, GST Circle gave a notice on cancelled supplier who have not filed their 3B and passed order to reverse ITC with penalty. Can this circle officer order sustainable? Sir, I already spoke on this aspect. Now, if it is merely an observation from the GST portal that these vendors are cancelled, and on that particular basis, if the notice has been issued, that notice is not sustainable because this was something prima facie available. But if the notice is arising out of a inquiry or specific report from DGGI, DGARM of non-existence, non-payment, and which was not available with the department at the time of audit, then that particular show cause notice is sustainable. However, having said so, proper reply, and you can take shelter or you can take support from many of the honorable high court judgments like Gargo Traders, LGW, who have come to the rescue of a bona fide. The underlining word is a bona fide buyer. If your assessee, your client is a bona fide buyer, the law is there to protect such particular buyers. However, in other cases, I think they will be having a tough time to defend the liabilities in the coming future. But yes, I think let me not go into it because itself this is a separate topic to be taken sometime. Do we take the benefit of depreciation on ITC both on GST of the fixed assets? Sir, absolutely no. You can only take the benefit of ITC against for payment of output tax, and such ITC should not be included in the value of capital goods which are capitalized for computing depreciation. Again, I reiterate, section 16 subsection 3 completely bars the availability of ITC in case of capital goods where such particular assets have been capitalized and depreciation on the GST value has been taken. I think that is all the questions I can see in front of me. If Impreet ji or anybody from the... Yes, ma'am. I think since Umesh was not there, I had much liberty to move fast, and I hope I was able to address the queries of most of the members. And I'm grateful to Indirect Tax Committee, to all my friends who were with us for last 2 hours. And I hope that we will meet again soon. So grateful to Indirect Tax Committee, our leaders, Sushil sir, Rajendra sir, my co-speaker in absentia, Umesh ji, who is also a Central Council member, all the support staff of Indirect Tax Committees, very important. Secretary Indirect Tax Committee, Smita ji, and yes, Impreet ji, who has been the backbone for this particular program. Thank each and every one of you. Thank you.
Thank you, sir. Thanks for your valuable support and input. We'll always be in debt of yours. Thank you. Thanks, everyone. My chairman, my vice chairman, the CCM Umesama sir and Gaurav Gupta sir. And thanks to my Epitome team for their technical support. Thank you.
Thank you. Thank you.
We can sign off for the day, Ashok ji.